two categories which often confuse investors are Flexi Cap Funds and Multi-Cap Funds. Funds in both these categories invest across market caps, but the fine difference between the two categories may make one category suitable for you and the other one not suitable. So do watch this video till the end, as this is really going to help you make a better choice. Hello and welcome to our channel 5 Minute Finance by ET Money, where we talk about the basics of personal finance and investments. In today's video, we'll explain to you all about the two categories and how you should choose between the two. So let's get started with understanding both the categories first. In 2017, SEBI made a lot of changes in mutual funds. It basically redefined the categories as many funds were investing beyond their mandates. SEBI named this exercise as the categorization and rationalization of mutual fund schemes. If we talk about the two categories under focus, what happened was that the multi-cap funds, which earlier could invest in any market cap of stocks, were restricted to now invest at least 25% each in large, mid and small cap stocks. This means half of the portfolio of multi-cap funds has to be in mid and small cap stocks at all times. So after the categorization activity, there was no category in equity funds where fund managers could decide which market cap to invest at their free will, and that's why SEBI in 2020 launched Flexi Cap category of funds. So Flexi Cap funds, we can say, are the go anywhere funds, meaning fund managers are allowed to invest across stocks of different market capitalization. Now for the uninitiated, the biggest 100 companies in terms of their size, also called as the market capitalization, are called as large cap stocks. The next 101 to 250 companies are termed as mid cap stocks. And the companies which are ranked 251 and beyond as per their size are called small cap stocks. Now there are 39 Flexi Cap funds and 24 multi-cap funds. Flexi Cap funds category is the largest and the most popular one in the equity space, holding assets worth 3.72 lakh crore. Parag Parikh Flexi Cap Fund with assets worth 66,383 crore is the largest Flexi Cap fund, in fact, the largest actively managed equity fund as well. The 24 funds in the multi-cap space hold assets worth 1.39 lakh crore, where Nippon India Multi-Cap is the largest fund with assets worth 31,963 crore. Now hope by now you know the basic difference between these funds. Let's dig deeper to compare and figure out which one is a better choice for investors. We'll start with looking at the portfolios. Now, at the risk of repeating myself, as you know that both Flexi Cap and Multi-Cap funds can invest across large, mid and small cap stocks, where while fund managers in Flexi Caps can invest across market cap, Multi-Cap funds have restrictions to invest a minimum of 25% each in large, mid and small cap stocks. So take a look at the chart on your screen. It shows how the Flexi Cap funds have changed their allocation across large, mid and small cap stocks. Noteworthy changes are that on an average they have allocated 58% to large caps as of May 2024, which has come down from 63% in June last year. Whereas the allocation to small cap stocks has gone up from 12.56% in June last year to 17.27% in May 2024. On the other hand, coming to the portfolio allocation of multi-cap funds over the last 1 year, we could barely spot any major changes. While the allocation of large caps has hovered around 40%, the allocation to small caps have averaged around 29% and mid caps around 26% over the past 12 months ended May 2024. So we could see that in the last 1 year, Flexi Cap funds have shown comparatively a greater flexibility in terms of changing their market cap allocation as compared to the multi-cap funds. However, the average allocation to mid and small cap funds is significantly higher in multi-caps as compared to Flexi Cap funds. Now next, let's look at their returns. As the two categories are relatively new, we don't have much history to compare. We do have old funds in these categories, but their history is not comparable as they had different mandates before SEBI's categorization activity in 2017. So when we looked at the trailing returns, multi-cap funds certainly outperformed both BSE 500 index as well as Flexi Cap funds category. In the 3-year period, multi-cap funds have delivered 23% against 19% of Flexi Cap funds and 20% return from BSE 500 TRI. Similar trends can be seen over 2-year, 1-year and year-to-date periods. If you look at their quarterly performance, multi-cap funds have outshined Flexi Cap Funds in 12 out of 14 quarters, and these funds have outperformed the BSE 500 index in 10 out of 14 quarters since March 2021. Now, one very obvious reason is more allocation to mid and small caps, but that's what makes it riskier as well. Although multi-cap funds have done better than both Flexi Cap Funds and BSE 500 index, but as we saw, the whole analysis is based on limited history of these funds. Plus, these categories are yet to witness a full-fledged downturn in the stock market post their launch. But what we can say with certainty is that with at least 50% allocation to mid and small cap stocks, multi-cap funds are certainly riskier than Flexi Cap Funds. So which one to select for investing? Well, we would recommend you to invest as per your risk profile. If your risk profile allows a perpetually higher allocation to mid and small cap stocks, you may go for multi-cap funds, else flexi caps may be a better choice. But how do you decide or know about your risk profile? Well, for that you can go to the ET Money app and take the Investor Personality Assessment, which helps you understand your risk profile and also guides you through suitable investment choices. Investor Personality Assessment hardly takes a few minutes. Now, with the hope that this video gave you some clarity about the two categories, we call it a wrap. If you liked the video, subscribe to our channel and share the video with your friends and family as well. Also, don't forget to press that bell icon to never miss a video from us.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.